Retail stocks selling off today, underperforming the broader market, capping off what's been a hit or miss year within the group. Here to share how the sector could fare in the new year, Bernstein's apparel and specialty retail VP, Aneesha Sherman. Aneesha, great to have you. It is often a sector that kind of has its sort of hot and cold running themes. I wonder how things are set up right now in terms of, income tiers, where consumer fatigue is showing itself, and what concepts seem best positioned.
Yeah, thanks, Mike. So into 24, we saw the higher income consumer fatigued. They had just seen the return of student loans, their credit card debt was up, their pandemic savings were depleted, and they just had this big run of kind of revenge spending in 22 and 23, and they were done. And so we saw a lot of trade down through this past year. Luxury underperformed, high-end fashion underperformed. We're now coming out of that gap year. So I'm much more optimistic on that higher income consumer into 2025. Sentiment is good. We just did a 3,000 person survey that we do every year, and the sentiment year over year looks stronger. And they have a low base to comp off. They've had a wealth effect this year from the strong market. They're expecting some rate cuts to come, and their pandemic savings haven't gotten incrementally worse year over year compared to the other income groups. So I would be playing the high income consumer into 25. I think they're going to have a better year than they did this year.
Yeah, high-income consumers, I guess they always have the capacity perhaps to keep their spending up, but it's a matter of desire, and you see consumer confidence levels rise to a fair degree. What retailers are in the way of that potential strong spending?
Yeah, I mean, any retailer that draws from that slightly above mid-income consumer, so someone like a TJX, their brands TJ Maxx and Home Goods, they have a six-figure income average household. That's the kind of retailer that could benefit from an expansion in the higher income wallet where it's more discretionary product, more nice to have product. Another one in high-end sportswear is someone like an On Holdings. In affordable luxury, it's someone like a Tapestry that owns the Coach and Kate Spade brands. So these are brands that are slightly above the mid-income consumer, and they are looking forward to getting another wave of growth from that higher income consumer, getting more constructive into the new year.
TJX, it feels like it's the stock for all environments, or at least it's presented that way. I mean, it's had another great year, up almost 30%. It's obviously got the premium valuation. When people are value conscious, it seems like a beneficiary. Can that always be true? Or, I mean, do they simply have that versatile and broad a customer base?
They have a very broad customer base and very strong execution, especially with the higher income consumer. I think the scenario in which the TJX does not do well is if we see 800 basis points of rate cuts tomorrow and, everyone chases low quality growth names, right? That seems less and less likely now, kind of given the messaging that we're hearing. So that's an environment where a stock like TJX does not do well. I don't see that being imminent.
Right. And just a final quick word on Tapestry. So this is as a kind of go it alone, their brands should be back in favor type of story?
Yeah, I mean, their main brand Coach, which is over 75% of sales and over 90% of profit, is on a run this year. They've been improving their brand equity. They're resonating with the younger consumer, with the Gen Z consumer, and with that slightly higher income cohort wanting to spend more into the new year. That's another tailwind for them.
All right. I know one Gen Z consumer I'm related to who got a Coach bag so my channel checks confirm.